Hello, good evening, good afternoon, wherever you are in the world. Clifford, the 25-year trader, back with another video. So today we're going to start a new weekly market update called the Sunday Night Futures Market Open. So with that being said, let's get it going. Okay. So, and just so you know, in the future, I'm going to do a Sunday night futures market open every Sunday night at around 6 p.m. Eastern Standard Time. And I'm also going to do a Wednesday morning midweek update at about 9:30 a.m. when the market opens on Wednesday morning. All right. And also you'll be able to see those in the future on my YouTube channel. So be sure to check that out. So, so here's the thing. So why would you want to see the market before it opens? And by the way, we got like 2 minutes before it opens here. In my opinion, this is the best time to get a look at everything, right? When everything is calm, right? Trading is all about, putting yourself in a calm mental state in my opinion, and it's a mental game. So why not start the mental game before everyone else and all the volume and all the craziness and the volatility, right? Sunday night, it's the perfect time. So we're going to take a look at the market right now. It's about to open here in just another couple minutes. But again, by checking it on Sunday night, now again, I look at the futures market a lot. I also look at the stock market as well. Now, the stock market, of course, opens, most people are aware, Monday through Friday, 9:30 to 4 p.m., right? But the futures opens Sunday night at 6 o'clock p.m. Eastern, and it trades all the way nonstop, 24/7, all the way until Friday at 5 o'clock, right? So again, best time to check the market is Sunday night. So let's see what we got here. So starting off with the close. Now, sometimes the market can gap on the open. So if that happens in just another minute here, then we'll see the gap, obviously. But most of the time, Sunday night, the market is very calm. Usually, unless there's a huge gap or crazy news. Then again, right now we got some war news happening, so you could see a big gap. But for the most part, usually it usually is a calm, like I said, low volume at the very beginning. Then things start getting moving, right? All right. So while we're waiting for the market to open, the way I like to start my week is first, why don't we see what's even going to be happening this week? So, what moves the market? Of course, the news, right? Economic releases, things like that. Check this website out here, forexfactory.com. If you don't know it by now, you definitely want to memorize it in the future because it's going to help your trading a lot. Basically, it shows every single country's economic release for the entire week. You just go right here to this filter and you got all the countries: Australia, Canada, Switzerland, China, Europe, Great Britain, Japan, as well as United States. I kind of like to watch them all, but it's up to you. You could choose the countries you're interested in. If you're only interested in the United States, you could just select that one. And then, oh, there we go. Bingo. Oh, looks like it did gap down a little bit on the S&P anyways. Oh yeah, we're selling off pretty. We started. Yeah, there's the gap right there. See that? That's the gap I was talking about. And again, it's because, a lot of this is happening with the political situation in Iran. I'm sure that's definitely affecting this gap right here. But most weeks, like if it's like a calm end on Friday and not too much turmoil going on, you won't see a really jump in volatility like this so fast. But again, we're in a different scenario right now. But anyways, back to Forex Factory. So yeah. So where was I? So you pick your countries. Red means high volatility, orange means medium volatility, yellow means kind of like low volatility. Me personally, I choose red. Apply filter. Now, today's Sunday. Pick your days. I go Sunday through Friday. Apply. And it should update. Oh, there it goes. There we go. So, so what do we have coming up this week? Well, really quick, as you can see, not much happening on Sunday. obviously, because the market just open. Usually you don't get too much news on a Sunday unless it's another country. You could click orange too if you wanted to. Like here, I'm clicking orange, right? Did I click orange? I thought I did. Oh, maybe my system's anyway. So, but Wednesday, that's a big one. CPI, that's the inflation report. You definitely want to be watching that at 8:30 in the morning. Um, Unemployment claims. That oh, what's happening here? Did it did it reload? Unemployment claims is also important. So I would definitely check that out. But let me do it again here. But the most important is that CPI. That's a big one. Wednesday morning at 8:30. Thursday unemployment claims, GDP for if you're trading the Forex, you might want to watch that. Canada unemployment trend. If you're trading the Canadian dollar, that could be important. United States core PCE, that's the other inflation report. I would definitely be watching that too because the Fed looks at that. And finally, GDP, JOLTS, job openings. That could be influential too. So as you see, really the volatility is probably really going to pick up on Wednesday. But anyways, it kind of gives you a preview, right? Let's continue. So now I check the market now that it just opened. And as I see, so far we got the Dow. Looks like the selling's continuing right off the bat. But what I think is happening here, let me see something here. One thing I like to check is the COT report. I'll make another video about this in the future. This is not an indicator. These are the positioning of institutional traders in the futures market. So whenever you see them selling, when you see these blue contracts negative like this, negative 20,000 contracts, that means they're selling 20 they're selling 20,000 positions in the S&P 500. And usually if they get overcrowded sold, you could see the market reverse like you saw here. So I like to check that on the open. So this is the Dow, this is the S&P, right? And as you see, they're really oversold the S&P right now. So it's good because the theory with this is that eventually, who else is going to be selling? At one point, the sellers run out of people to sell, and they have to start, and then the buyers enter the market, and then they're forced to buy back their positions in a short squeeze, which causes the market to catapult like it did here, like it did here, right? Because look how oversold they were. So I just like to take a glance at that real quick. Nasdaq. See here they were overbought the Nasdaq, and look, it pulled back. Again, this isn't an indicator. I don't trade with indicators, but this is a government report that's released every Friday, every Friday at 4 p.m. Commitment of traders. I'll make another video about that in the future, but for now, just know that this is the institutional positioning in the market. And right now, they're no longer overbought the NASDAQ like they were here. And I also like to check the Russell real quick, the small caps. See here, they were oversold by 95,000 contracts. And then they started closing some of those oversold. All right, so just kind of get a glance real quick. So pretty much what I think this week I'm going to be watching, me personally, is definitely, I'll be watching this level right here on the S&P 500 to see if it holds. This is the futures contract, but again, same thing would apply to the SPY if you're trading that 65.84. I want to see if it bounces off that level. If it does, then that could be a sign that the selling might halt a little bit. On the Nasdaq, it's already broken support. I'll probably be watching this one here. I want to see if it closes below that level. So I'll set up my charts for this week right away. Just kind of watch these levels right off the bat. First thing tomorrow morning, I'll be checking if those levels held or not. On the Russell, I kind of got a Fibonacci level here. I'll be watching that. And that's about it with the stocks. Also, I watch the VIX because this is the volatility index. You want to know where the volatility is in the market, in my opinion. Um, Low volatilities like here, 15. If you're new to the VIX, definitely I'll make some videos about that in the future as well. But like here, 15, 23. Once you rise above like 21, that means we're in kind of like a high volatility environment. Over here, it was like in April, it went all the way up to 44. So that's extreme volatility right there. But now that we're broken above 23, this is something to keep an eye on as well. So that's about it for the index futures. I'll head over to my global markets real quick. And we see oil's on a serious run to the upside already at 104. Usually these gaps get filled. So if someone was going to buy oil, I definitely wouldn't buy a runaway market like this, me personally. I would wait for some type of pullback because these vertical markets usually don't last very long without a correction. Always keep that in mind. Like, you see what I mean? Look at gold. Gold back in January shot up from 4,300 all the way to almost 5,600. But look, in one day, this thing corrected 21%. So always remember vertical markets when they get vertical like that, parabolic, whatever, they don't last long without a correction. So if someone was going to buy oil, I would think, yeah, you need some kind of correction, maybe back to support like down here. I would say like maybe 78. If that level holds, that'd probably be a good bullish place to enter for those who are thinking about oil. This one here, Bitcoin, I've been watching this too. These are Bitcoin. Let me see. It's kind of like hovering, looking for a bottom, but hasn't been able to find one yet. Let's see what else we got. Metals. Oh, we got gold. We got silver. Yeah, same thing. Kind of just hanging out there. Not much going on there. Over to the currencies. Take a look at the euro, just real quick. I like to just take a quick glance to see if there's anything. Um, this is the yen against the dollar. I saw it break out here, pull back a little bit. Canadian dollar, Australian dollar. And again, the same rules apply here with the COT because these are futures contracts. You could also check the contract positioning on them. See, like here, I know they're overbought the euro, and look, it did pull back. Here, they're kind of like oversold the pound right now. So the way you use this report is that you kind of like want to look at it as a contrarian view. If they're oversold the market, you don't want to be a seller because remember, usually the sellers dry up when they hit here. See that November last year, as soon as they hit 92,000, boom, they unwound that short position. So, just some ideas there, but let me see the yen. See, like here, this is a great time to sell the yen because see how overbought it is here? 181,000 contracts, right? Back last year in April. And then look, when they unwound it, right? But now it's neutral. The zero line is kind of like neutral. So they're kind of like, they're not really overbought, oversold. So I wouldn't do much with that. Canadian dollar. That's about it for this week. I think we're almost done. Real quick, take a look at the bond market. I do like to watch that also because they all kind of like influence each other for the most part. Bonds have been kind of going down, and for those who are new to bonds, real quick, they move opposite of interest rates. So interest rates are going down, bonds would normally go up. Interest rates are going up, bonds would normally be going down, and kind of like that. This is yeah, not much really in the bond market yet, but I will keep an eye on that. So yeah, so really, I mean, for me this week, actually, I'll check the stocks real quick. Let me just check a few. I do watch the Mag 7, although this isn't open until tomorrow. I've been watching Google briefly here, kind of like forming a little bit of a top, so I'll be watching that this week. Amazon, not much really. No, kind of just hanging out there. Apple really just kind of like pulled back a little bit. I don't see any real strong developments. I think all these are influenced by the Nasdaq. Nvidia. Now this one I will watch. See that level right there? This is one thing. This is why you don't need indicators. I believe that support and resistance tell you the true story. See how every time it tests this level, 170, bounce, 170, bounce, 170, bounce, 170, bounce. So what does that mean? In my opinion, that means that this support is strong. If you get a close below 170 at on a daily close, that could mean that there could be some bearish momentum starting in Nvidia. But if it holds, then that means the buyers are going to continue buying that dip at 170. Microsoft, Tesla. So I do watch a couple of those too. But yeah, for me this week, I think the main thing is to check out this S&P level right here, 65.84. That's like the line in the sand for me. So I'll be watching that. If the market bounces off that level, then that again, that could be a sign that probably the buyers aren't looking to are looking to defend that level. And on the Nasdaq, I'll be watching this one. We're getting close now, 24,150. So yeah, that's about it for this video. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing all of you guys in the next one. And have a great trading week. And I'll be back in touch with everyone on Wednesday morning. Have a great day.